There's $1 trillion moving through AI right now, but here's the catch. Most of it's the same money spinning in a circle. OpenAI is paying Oracle hundreds of billions, NVIDIA is investing in OpenAI, and those same dollars come right back to NVIDIA through chip sales. So the question isn't how big AI will get, it's what happens when the money stops moving. Stay with me because what's happening right now in AI looks a lot like 1999. Let's start with the headlines that broke the internet. OpenAI and AMD 5-year AI data deal. OpenAI and Oracle $300 billion cloud partnership. And NVIDIA, they just dropped $100 billion straight into OpenAI. Meta's spending $15 billion, SoftBank's tossing billions at NVIDIA, and we officially created a brand new industry called AI infrastructure. That's code for the world's biggest companies are building data centers so expensive they have to finance each other to pull it off. And that's where this gets wild. At the center of this $1 trillion web are two names, OpenAI and NVIDIA. OpenAI gets $100 billion infusion from NVIDIA. Then what do? They spend that money leasing NVIDIA's GPUs. Oracle jumps in, spending $40 billion on NVIDIA chips to build data centers for OpenAI. CoreWeave, another NVIDIA-backed company, rents out those exact same GPUs to OpenAI. So NVIDIA is investing in the people who buy its chips. Those buyers get more valuable, and NVIDIA stock shoots even higher. That's what analysts are calling circular financing, the illusion of endless growth, powered by the same dollars spinning between the same companies. Watch the loop. NVIDIA, OpenAI, Oracle, CoreWeave, NVIDIA, each arrow represents billions. Every company looks richer, but the pool of money never grows. Looks like growth, feels like growth, but it's just recycling. To be fair, this isn't all smoke and mirrors. These projects are massive. The Stargate build-out alone, a $500 billion network of AI data centers, is backed by Oracle, SoftBank, and OpenAI. No single company can afford this scale, so they join forces investing in each other to build the future of AI faster. But there's a catch. When you borrow from each other, you create this illusion of infinite demand. And that's exactly how bubbles start. Right now, OpenAI alone has about $1 trillion worth of deals on paper. That's a bigger budget than most countries. Meta's pouring $10 billion into Google's servers. AMD's giving OpenAI a stake just so they'll buy chips. NVIDIA's agreeing to pay CoreWeave $6.3 billion for unused cloud capacity. Capacity built with NVIDIA chips. It's like a hall of mirrors. Every deal reflecting another deal. Every valuation feeding the next one. And experts, they're nervous. They've seen this before. .com companies used to lend money to clients just so they could buy their own services. Analysts call it vendor financing. Back then, it helped fuel the .com bubble. And when the loop stopped spinning, the crash was brutal. Sound familiar? To make all these AI dreams real, the world would need about $2 trillion a year in AI revenue by 2030. Right now, we're hundreds of billions short. If that gap doesn't close, the money loop breaks. When that happens, companies like NVIDIA and OpenAI could suddenly find their demand wasn't real demand, just financial momentum running out of road. But the tech giants say this isn't a bubble. It's a revolution. They say this is the internet all over again, a once-in-a-generation infrastructure build-out. So what do you think? Is this a bubble waiting to burst or the foundation of the next $1 trillion revolution? Because if everyone's investing in everyone else, eventually someone has to be the customer.